The Asian session is one of the easiest time periods to trade inside the market, and in this video I'm going to teach you my exact strategy that you can utilize to start making money and pass your challenge accounts. So all my videos going forward are going to stem from the understanding of my free course. So if you've not checked out my free course already, I would recommend you do so because every single video is going to stem from that understanding. And this strategy is no different, and we are going to focus on the Asian range, and you're going to utilize the time windows that I'm going to teach you. So without further ado, let's get into the video. So one of the main components to this model is going to be utilizing a previous session, and in this scenario it's going to be the PM session. So within this session you're looking for it to be a consolidation, because when the market's in a consolidation, this is where we will see an expansion, and when we trade Asia you want to see an expansion inside the market. So this is one thing that you need to understand. Small ranges within the market will create large ranges, and then when we have large ranges, they will create small ranges. So you want to be trading in the large ranges. You don't want to be trading inside of the small ranges, because this is where you will see the choppy price action, and this is where majority of you will have your losing trades. So you want to trade inside of the expansion. So the easiest way to identify when a trade is going to be high probability is if we have a previous session which is in a consolidation. You can anticipate the next coming session to be high probability because we are anticipating an expansion. So with that being said, your next focus is going to be 8 p.m. to midnight on New York time. So this is going to be your Asian range, and this is where you are going to trade within. Once you have your Asian range, which is from 8 to New York midnight, then you will look at 8 p.m. This is very important because this is going to show us overbought and oversold. So this is going to act like midnight opening price and other opening prices that I have taught you guys. Obviously, if we're above 8 p.m, this shows us that the market's overbought. And if we're below 8 p.m, this shows us the market's oversold. So when the market's oversold, this is ideal for us to buy. And when the market's overbought, this is ideal for us to sell. And this is the exact framework we're going to use, PM opening price. And then to every single high probability trade framework, there has to be a stop run. And this is what we are going to wait for. So if the market offers a Judas swing, so if we open up at 8 p.m. and we just trade to the upside, we are looking for a stop run. Any stop run or SMT, this is going to be valid. And then what do we do? Once we have the stop run or an SMT, we confirm that the market wants to go in the direction we want. So we wait for a change in the state of delivery. So I like to use 3 candles for a change in the state of delivery, and I will go into that when we go over a template example. So once we have the stop run and the change in the state of delivery, the next step is very easy, and this is all stemming from your understanding of my free course, is we're going to enter from order blocks, and it's going to be in the direction that we want the market to trade into. So if we're bullish, down close candles are going to support the market higher. And if we're bearish, up close candles are going to support the market lower. And this is the exact framework that we're going to enter from. With all that being said and covered, I'm going to go over this one more time. Then we're going to go over a template example. Then we will move on to the charts. What's the first thing you look at? You look at the previous range, and the previous range needs to be a consolidation. So the previous range is the PM session. If this is ticked off, it's a consolidation. Then you will map out 8 p.m. to midnight on New York time. This is going to be your Asian range. I know ICT or some other educators teach Asian range differently. I found 8 p.m. to midnight be the most consistent time window to trade from, and this is what I would recommend you trade from as well. So once we have 8 p.m. to midnight, we look at the 8 p.m. opening price. So if the market trades higher, this will represent we're overbought, and if the market trades lower, this will represent we're oversold, and then we will use this framework to map out our trades, and then we will look for a stop run. Once we have a stop run, the next thing we do is wait for a change in the state of delivery. Once the market changes the state of delivery, we will look for entries and trade inside the market. So this is the overview of the model. Let's go over a template example, then we will move on to the charts. Okay, so now let's go over a template example of the strategy when we are bearish. So the first thing you're looking at is a PM session consolidation. So you can see right here, this is where the PM session consolidates. What is the next thing you look at? You wait for 8 p.m. opening price. So this line that I'm pointing at right now represents 8 p.m. and you're looking for the market to start trading at 8 p.m. and offer some sort of Judas swing. So if we go back to our checklist, we have had a PM session consolidation, and then our focus is 8 p.m. to midnight on New York time. And then we look for 8 p.m. open, and we are looking for either if we're overbought or oversold. Once we recognize that the market's overbought, we look for a stop run, which happens right here. What is the next thing we wait for? We wait for a change in the state of delivery. So these up close candles that traded higher into the buy side liquidity, this is going to be our change in the state of delivery once we close below them. Once we have a closure below, this is where we can represent the change in the state of delivery, and then all green candles that we print, they are going to support the market lower, and trade into sell side liquidity. And this is where we are going to target for a 1 to 2 trading setup. So this is our change in the state of delivery. And then the next thing is order blocks for entry. So this is the framework to this model. You can see if you watch my free course, this is a repeating phenomenon. So once you find something which repeats inside the market, all you need to do is rinse and repeat it. That's all to the model when we're bearish. Now let's go over a bullish example, then move on to the charts. So when we're bullish, the same framework, we're looking for a PM session consolidation, and then we wait for the 8 PM. So if the market trades lower at 8 PM, this is where we know that we are oversold. So this is ideal for us to look for buys. All we do is wait for a stop run. So this is where the market runs lower, takes out sell side liquidity. And then what do we do? So all the down close candles that were made right here, once we traded into the liquidity pool, we will wait for the market to trade higher, close above them, have a change in the state of delivery, and then we can anticipate price to continue trading higher. And all down close candles are going to support the market to continue higher. So this is the template example for when we're bullish, and this is pretty much the strategy. It's very simple and you need to follow it step by step. If you don't follow it step by step, or if one of the steps don't come together, then you have no trade. So with all that being said, let's go over a chart example. Okay, so here I have a chart example of the strategy. So the first thing you look at is a PM session consolidation, and you can see that the PM session just traded sideways. So this shows us that the market is stuck within a range. So the next session, we can anticipate an expansion out of here. So what's the first thing you do for the strategy? You identify a consolidation or a range from the PM session. Once we have this, your focus is 8 PM. So this dotted line represents 8 PM to midnight on New York. And you're looking for a Judas swing to happen at 8 PM. So if we trade higher, this represents the Judas swing to the upside. And if we trade lower, this represents a Judas swing to the downside. This will show us if the market's overbought or oversold. Once we have this, we are going to look for a stop run. Once we have the stop run, a change in the state of delivery, and then we can enter within the market. So the first things first, we wait for the candles to start printing at 8 PM and we don't do anything. So once we've identified if the market was overbought or oversold, we look for a stop run. So below all of these lows, we had sell side liquidity, which the market traded into, and then we took. Once we take out the sell side liquidity, what is the next thing we wait for? The next thing we wait for is a change in the state of delivery. So we've identified that the market's oversold. We look for a stop run, price trades into sell side liquidity, and then we look for a change in the state of delivery. Well, we have these 3 beefy down close candles. And as I said at the start of the video, I like to look at 3 consecutive down close candles or up close candles for a change in the state of delivery. So once the market closes above here, this will represent the change in the state of delivery. And the next step is very simple. This is where we are going to enter within the market. So as you can see, price closes above the down close candles. So if we return back to these down close candles, this is going to be an optimal area for us to buy, because these are the down close candles which change the state of delivery. So order blocks which change the state of delivery are always very sensitive. And as you can see, price trades back into these down close candles and the volume imbalance. So 50%, we don't want to see the bodies close past. So we don't want to see the bodies close past 50% of the down close candles which change the state of delivery. Price trades lower and closes below 50% of the order blocks which change the state of delivery, then the setup's invalid or we have a losing trade. However, if we stay above 50% of the down close candles, this will show us the setup is valid and the market is likely to trade higher. See, this is where we trade into the buy side liquidity, then the market starts to range around. So this is exactly what this strategy does. You need to be in and out of the market, make your money, then get out. And this is the exact framework that you need to utilize. So you can see previous session consolidation, 8 to midnight. This is the time window that we are looking to trade. And then we wait for a stop run. We have a sell side liquidity run right here, then another one. Then what are we waiting for? To show us that the market wants to go higher, we wait for a change in the state of delivery. And what have I taught you? You're not looking at any random down close candles or up close candles. You can then utilize down close candles to support the market higher. So you can see all of these down close candles are supporting the market higher, then we start to range around. So this is the exact framework that you need to start utilizing if you trade the Asian session. And if you made it this far into the video, make sure to leave a gem emoji in the comments down below so I know that you watched it all the way up to here. However, I hope you found this video insightful. As always, I'm rooting for you and I hope you find success in this business. Enjoy the rest of your day.